Joining me right now is Natasha Sarin. She's president and co-founder of the Budget Lab at Yale. She also served as a counselor to Treasury Secretary Janet Yellen. Natasha, thank you for being here. The headlines, or just the facts, of yesterday are just wild. The Dow shed almost 1,000 points and is headed for its worst April performance since 1932. The S&P 500's performance since Inauguration Day is now the worst for any president up to this point in data going back to 1928. Add it all up and you see what?
So I think what the market is telling you essentially is that the Trump trade is sell America. And what I mean by that is you're seeing the stock market crater over the course of the last 90-ish days. Yeah. You're also seeing, though, which is kind of strange, normally when the market is doing poorly, investors turn to bonds, to government debt, because that feels safe and we're the reserve currency of the world. And so that's a good place to park assets. What's happening right now is that they're not doing that. And in fact, the bond market is down. The dollar is down.
That was going to be my next question. That indicates what then?
It indicates that we are at real risk of no longer being the safe asset of the world. And that is obviously deeply troubling when you think about like our geopolitical status and the American economy. But it's also deeply troubling to the American people for their pocketbooks, because what it means is it means persistently higher interest rates, and it means less employment and a less strong economy.
I mean, it clearly seems from the way investors are reacting, the market's reacting, and the world is reacting, that few think the administration's negotiations with trade partners are going to either bear fruit at all or bear fruit fast enough to stop the bleed or soften the blow. I mean, has the train left the station, do you think, at this point? Is it guaranteed this is going to be bad and this is going to snowball?
So I want to be like very precise. What you are talking about right now currently is tariff rates that are higher than at any point in the last century.
Right.
And the reality is what this administration has launched is essentially a trade war. And when there is a trade war, there are no consumers that are winners. The average American, we sort of ran the numbers at the Yale Budget Lab and are continuously updating them. The average American family is going to see price increases of $4,800 this year. That's the largest tax on American families in recent history. And so it is really problematic and it's really concerning. And to your point, I think we're all kind of waiting and watching to try and understand what the off-ramp might be. But I want to be specific, like, this is not a financial crisis that a bank failed. This is not a situation where you're dealing with like COVID, a once in a generation, one hopes pandemic. This is a man-made crisis by this administration. And the question that markets are asking that I think we all should ask is to what end?
To what end? I mean, and so it's either a distraction, it is serious, or a serious distraction in both of the president continuing to attack and try to undermine the Federal Reserve and Jerome Powell. But then, so add that into the uncertainty picture. And now we know the IMF, the International Monetary Fund, is coming out this morning, and this is going to be the first report of its global outlook since President Trump has come back into office and since his trade war definitely has set in. And we are standing by to see exactly what it shows. But if it isn't good, if it's not a good read for this White House, if it shows a downgrade, what does that tell you? And,
Politico is reporting that it is going to show a downgrade. And so what that tells you is that in January, the last time before this administration took office, the last time the IMF was thinking about future growth prospects, they were actually up on the United States. It looked like GDP growth was strong. The U.S. was looking like a fantastic place to invest. Our labor market was strong, and inflation has been coming down, and the Federal Reserve has a bit to go to get to that last mile, but the economy was doing incredibly well. And now you're in a situation where, again, we're not even at 100 days yet, but what the markets are telling you, what the IMF is telling you, is that the global outlook is looking much shakier, and it's looking shakier at the helm of the United States looking much shakier, and that is really, really quite disconcerting.
When you make that January comparison, and it has changed dramatically quickly.
Very quickly.
Thank you so much for coming in.
Thanks so much for having me.